All right, let's check in on shares of Sprott, which are bouncing off of a 2-month low following quarterly results that saw a drop in sales and profit. But the company is continuing to shift its focus, growing towards wealth management and asset management in general. Whitney George is the CEO of Sprott and joins us now. Whitney, thank you so much for being with us. I think we can get lost in the quarterly results, but the real story of what Sprott is going through is kind of this final shift towards asset management and launching new products, new ETFs. Can you give us a sense of how you're progressing against that strategy?
Thank you. Great to be here this morning. I think we're progressing very nicely. I mean, to be able to grow AUM and earnings in a year like last year, I feel pretty proud of. We were happy with the results. I guess I said something wrong though on the call because the stock didn't react very well. I think we're there in terms of the transformation of what Sprott wants to be when it grows up. We've done a bunch of acquisitions. We've kind of entered a whole new space in addition to our traditional precious metals focus, which would be energy transition. That really began about 1.5 years ago with the creation of the Uranium Trust, where we bought a corporation and converted it to one of our physical trusts. And that's really led us into this whole energy transition space. We have a lot of talented people with a lot of expertise in mining, and we think we're very well equipped to offer investors solutions in what we think is going to be a very large and important theme in the next 10 years. And
so as part of that, you're selling the Canadian broker-dealer business. What went into that decision, and why was it important kind of not to have that and to be laser focused on, as you say, growing the assets?
Well, it's a nice business, and it is one that was built back in 2016 when we were still trying to figure out what we wanted to be when we grew up. Transformed from Eric Sprott's boutique to what we are today. It's a small business for us. It does serve a different client base than our investors. I think it's going to do very, very well, but it was not really material. It has a separate set of regulators. A lot of separate kind of accounting. It's not a business that we thought that we could kind of scale the way we can our physical trust and some of our other divisions. And so we thought it was important to remain laser focused on being an asset manager, which is a business that has lots of operating leverage without the financial leverage.
And so you've got the bread and butter, as you mentioned, with gold, with silver, your platinum and palladium plays. Let's spend a beat on uranium, because this is an interesting approach, a physical uranium trust. How does that work? Why approach it in that way? And what do you see as kind of the sector tailwinds as more and more people look to nuclear as an energy source?
Sure. Well, I think our physical trusts are unique products created after the financial crisis, when people started to become concerned about counterparty risk. Clearly, that fear is even heightened since the Ukrainian crisis. And today, it's a matter of not just in time inventory, but it's just in case. The world did wake up. We were fortunate in our timing. We didn't know that the world was going to wake up and understand the cost of decarbonization and the benefits of nuclear power in that process. We were working on this transaction starting 3.5 years ago. It just happened that sometimes you look smart on your timing, but it's really just good luck. The trust holds physical barrels of yellowcake uranium. Stored, I believe, in 4 different facilities around the world. What we've done, I think, is created a vehicle that gives some transparency into the spot pricing of that market. As demand currently exceeds the annual production, we think there's going to be a repricing over the next few years as more nuclear power plants are built. Those that are in existence have their lives extended, and people really do understand a business that's kind of been kind of considered a dirty business for the last 40 years, and really understand the safety and the benefits of having a secure, constant power supply to undergrid intermittent supplies in solar and wind.
I guess I'm trying to understand why the need for to physically hold uranium. I get, gold, obviously, it's a store of value. It's a precious metal. But uranium is productive. You have to actually use it. So why would I, as an investor, want to hold it versus, a Cameco or something that is actually putting it to work and benefiting from the extra upside of putting it to work?
Well, it's a physical commodity that we believe is mispriced with the new long-term fundamentals. And as the market evolves and new mines need to be built, we think price discovery will make this a good investment. Now, we do offer uranium ETFs, both senior and junior, that own things like Cameco. So it's just one way to play it, the same way that we offer investors gold, either in its physical form or through mining equities, both passively and actively managed.
And so this is part of your energy transition ETF suite, those uranium miners. You've also got lithium, though, and that's really got the hot hand recently, especially as OEMs, major car manufacturers, look to secure their own lithium supply. How do you see that playing out?
Well, again, it's part of the new narrative, from just on time to just in case. And the quantities of lithium, cobalt, nickel, copper, all of those basic materials are going to be strained. I mean, as we try and achieve the goals that the world has set out for decarbonization. There just isn't enough supply, and very often it's in unfriendly jurisdictions. So all of these materials are what we would consider to be part of those that are essential to accomplish the goals we've laid out for the next 20 years.